Good afternoon, happy Friday. This is Sean LaBelle of the Decker Hewitt Group. It was a good week here for North American benchmarks as we did see a few indices hit all-time highs. We were also closing out a very good month of April for all major benchmarks seeing gains. Moving markets this week was a continued rollout of Q1 earnings, which are coming in dramatically better than expected. Around 70% of S&P 500 constituents have reported so far, and 82% of those are surpassing expectations. Earnings growth is coming in at a historic pace. Companies are forecasting earnings growth around 40%. Just for reference, expectations were for around 26% earnings growth. So you're seeing a massive beat there on the bottom line. So this week's Market Watch Weekly just runs through that a little bit, along with this growing conversation that we're seeing just around the price to earnings multiple of the market as a whole. So while it is somewhat expensive relative to historical standards, there are reasons why it can continue to sort of grow, one of which being the very low rate of interest rates and the other being just the pace that earnings are in fact growing. So while that earnings multiple right now of the broader market is relatively high, it isn't necessarily a reason to be cautious. Also discussed in this week's Market Watch Weekly was just the torrid pace of gains out of the Canadian dollar. One of the best performing currencies so far here in 2021, now eclipsing that 80-cent mark on the USD. So this week's Market Watch Weekly just jumps into that also a little bit more. Hope everyone has a good weekend, and we will talk to you again next week.